it is a common sight that a lot of people, a lot of swing traders that starting out on their beginning journey have burnt out from the overload of information, or they just felt that, there's too many things to take note of, I'm just better off investing. And that's actually true for some people, because for some people, okay, longer term investing is the way to go. But for people who are able to control the emotions well and takes trading as a business career, okay, those can be very, very profitable as well. 50% of the trading game is emotions, and that kind of emotion training is honed through countless hours of practice with real money. And the goal of newer investors or traders should be to preserve their capital so that they are able to last through the first stage, which is the toughest stage of their swing trading career. And in today's video, I'm just going to talk a little bit more about some of the emotional traps that you as a beginner swing trader must avoid so that you can become a long-term profitable swing trader. Okay, if you're new here, I'm the Stock Estate. Okay, today I'm dressed a bit more skimpily in a sense because I just want to get this video out to you guys, and I'm not in my usual studio, so comment down in the sections below if you like this kind of, background scenery that I have right here. So drop a like, subscribe, and let's get on to the video. Okay, so first, trading is an organism that needs to be perfected and understood bit by bit. Okay, you can't just go in and try to understand every single thing at once. You can only digest bit by bit, piece by piece, and then you can able to form a nice big picture of what kind of strategies will work, what kind of emotions that you need to control in yourself. And this is actually honed through many execution. And new investors or traders must protect their capital as the first trading rule. You must not risk too much, because once you blow one account, that's where a lot of people just, okay, fine, wait, I have done the wrong thing, okay, this is gambling, okay, the big boys are here to get my money, okay, this is all a scam. Okay, it is not. It is a very, very fair game, okay, where those price charts, okay, are just the collective of emotions of the entire world that are playing this market. So first, as a beginner trader or investor, protect your capital. Okay, and protect your capital, risk small so that you will lose small. And through many different trades, you experience profits, greed, thirdly, tragedies. Okay, and I say tragedies because tragedies are the ones that really will help you grow. Okay, I remember one of the stories, one of the examples that I had. I was doing day trading, and why did I switch to a mainly swing trading based strategy? Because day trading I tried, right? There was this strategy that I had. Okay, it was going on a straight line. Okay, I got complacent. Okay, I got complacent and I didn't set a stop loss. Okay, back in my early days. Okay, and bam, to the downside, lost almost all the earnings that I had on that day. So after that, I was really traumatized. But you see, these kind of examples will really imprint itself onto my mind. Okay, till this day, I still remember that trade itself. Horrible trade. Okay, but that is actually a very good example, and these kind of tragedies that you will have along the way will help you to hone yourself as an investor and trader, and help you to gain instincts that you will need to carry yourself through to the future trades that you will execute. And very luckily it was a day trade, because since it was a day trade, okay, I only lost not a lot of my capital. It was around 5%, which was a lot for a day trade. So that was an immense loss that I have taken. Okay, but luckily I do have the emotional standpoint, to quickly exit out of the trade just in case it falls further against me. So again, risk small. So if I had not put my stop loss, I did not control myself further. I let it dump all the way. I could have blown my entire small account. Okay, back then. So very important, to experience some tragedies here and there, but risk small, so that every single tragedy will not be a huge loss that will blow your account, so that you will never touch into this trading world ever again. Alright, now that we know we need lots of practice, okay, by risking small and gaining some instincts in the markets, I'm going on to my second point, which is, although you need to practice a lot, okay, this demands that you are able to adapt to different market conditions. So for example, if you are a guy who only knows how to trade in momentum markets where the markets are in a bull run, okay, just like in 2020 March to all the way to year end, it was a huge bull run. Okay, if you are the kind of trader who only can trade momentum markets, which is markets that are rallying very high, if you go to a market which is around 2021, the start to now, which is around 2021, April, May, Okay, it has been in a choppy markets, and you will realize that many tactics that you have employed back then in the year does not work now, and you'll get chopped, get destroyed and chopped up in the markets, and you will lose and lose and lose, and you'll get very discouraged. You'll be like, oh my god. Then you will have to be forced, to take a break, okay, and not do anything, and don't do anything. But however, we know that we need practice, and your restless mind would want to execute a trade, even though it is a bad one. So by sticking to a old trading strategy that does not work in today's context, you will be taking bad trades and losing money just for nothing. So do not be a guy who only knows how to trade one strategy and just trade that one strategy. Okay, you gotta learn how to trade at least 2 or 3 in different markets. Okay, when the market's in a range, when the market's in an uptrend, and when the market's in a downtrend. Okay, so these are the 3 kinds of market cycles that you have to master to have at least 3 strategies that you have to practice. And some of you might say, hey, okay, there's too many strategies, man. I just want to trade one strategy and trade it very well, and not try out so many and risk getting splitting my mind up and losing money on other 2 trades. Fine, okay, I can agree to that. Okay, so you can focus on one trade itself, but I think you can use paper trading to trade the other 2 kinds of setups and get potential returns on paper. So if you lose, at least you gain some exposure by backtesting your strategies on the other 2 kinds of markets. At least try out a few other strategies, because the best swing traders are able to trade in different markets, and hence they will get the optimal positions that they have, as well as the right trading strategy to fit the right market conditions to maximize their profits. Alright, now that we know that we need to trade different strategies, to suit different markets, you sometimes might get a little bit tight, because there's a lot of things you need to, take care of, learning, executing, and this requires a lot of, hard work, time, and discipline, during your spare time. And the third point I'm going to make, which links directly to this point as well, which is beginner traders or investors, sometimes they get burned out and they get tired, because the daily requirements of trading or swing trading itself, by monitoring your positions, right, will have a toll on your mental health, and it is a little bit tiring over time, especially for day trading wise. Okay, for swing trading, it's a different kind of mental toll where a lot of the stress is there, whereby you need to endure large swings, and as well as holding overnight, you will have the kind of stress that oh my god, next day will it get up, will it get down, these kind of emotions. And many of us will either become lazy, or we take it as a gamble, where each trade becomes I win all or I lose all. Okay, we start to see very short term and not really a long term swing trading as a long term event. Okay, the immediate $100 loss is a permanent $100 loss where you felt so bad. Whereas if you look at the bigger picture, this $100 loss is just part of the 1,000 that you will gain in the future, as long as you keep executing according to a proven strategy or a proven swing trading plan that you have made yourself. So I beg you, if you are feeling not a bit off, a little bit tired that week, you are feeling not that well, physically, mentally, feeling a little burnt out, okay, close your positions, take a 1-week break, come back again fresh in your mind, okay, and start learning again. Because you cannot be lazy, you cannot be burnt out, okay. Firstly, if you are lazy, then I suggest swing trading might not be the position or the kind of investments that you want to make. You will be better off buying and holding very strong companies, okay, maybe like the blue chip companies, but those, okay, will not be a more active kind of income, will be more of a long term, maybe 10 to 20 years for your retirement, but it will not serve to give you a kind of active income every single month, because those, you can't really control the fluctuations in the market for the long-term investments wise. You're just putting your money in, okay, and if the market's in a short-term downtrend or downturn, you will not be able to take your money out, because if you take your money out, you'll be at a loss, right? But for swing trading, it's more active because you'll be stocked out, okay, then you will go back in at the right timing and earn the money back, and you will be able to recover or get out some capital, for your own expenditure. So if you are not being a hardworking person or diligent person in your swing trading and not treating it very seriously, then okay, swing trading might not be for you. Alright, so this is the third point that I want to make, which is one of the very basic mistakes that beginner swing traders have. And these are the ones that makes them washed out, feeling a bit tired and sick of swing trading, and eventually they find a safer hobby which they just go into. Well, so today we covered a few points. So the first point is, not to be lazy, not to be complacent when you're trading the markets. Second, we want to learn how to adapt to different market conditions and develop different strategies for different markets. And thirdly, we will want to have consistent practice to develop the trading instinct, okay, that we will stick with us when we execute trades in the future through real life practice, through our strategies, through our hard-earned profits. And with these, I want to leave you on with a quote itself that I realized over trading itself these days, which is trading is very similar to real life, where we are taking on risk for a potential reward. Just like everything else in our lives, okay, we are going to school, we are risking a certain amount of capital by paying our school fees for a certain reward that we have in the future. We are risking our time to work for a certain company for a potential reward that they'll give us in the future. So everything in this world is actually risk to reward. And if you treat trading as a business, as something that you want to do for a long term, for a longer time, and you believe that you have the potential to excel in this will be a very, very profitable and as well as a very promising career for you. And I hope you enjoyed this video. Subscribe to the channel, like this video, and I shall see you again in the next video. Stop, stay down.